Good morning, guys. Welcome to today's session of Market Snapshot. I'm having a bit of technical issues, but if you can hear me, just say hi in the chat section. We have a lot to unpack. And I think I'll start by sharing my screen. This part over here. Hi, Richie. It's glad to know that the voice is okay. So today we have a lot to unpack with regards to what is happening in the markets. And I think we will go slowly. There's a lot of central bank commentary that we need to go through that's going to help us understand the way forward. So I'll start by this article, which was released yesterday, and then we will jump into this one that was about 1 hour ago. Actually, I was still trying to go through this with regards to what's happening in the markets and how should we position ourselves. This week, we did one webinar on market sentiment. So after this, it's good to go through that one because it allows you to understand how to go through the news and interpret it. I'm not able to. Can you hear me in the chat section? Oh, loud and clear. Okay. I think I'm streaming the wrong one then. Okay. It's loud and clear. Okay. Yeah. So let's carry on then. Okay. So here it's saying Fed hawkish hold prolongs late cycle and dollar strength. Yeah. So remember this week what we had in the middle of the week, we had this one, the federal funds rate came out this week, and it was suggesting, first off, they paused. Yeah, instead of hiking rates, they paused the hike. Yeah, but this is called a hawkish pause. Why? Because in as much as they paused the interest rates, they also came out saying that in the statement, they also came out saying that they will hold for longer. So if you go through this statement, I'm not sure if I'm able to find it here. I don't know, it's not been updated here. But if you go through the statement, especially in the press conference, they say that they will hold for longer. Now, what does this mean for the dollar? Remember, people are expecting that after they pause or after one more hike, they start lowering interest rates. And interest rates usually create a stronger currency. So if they start lowering sooner, then the dollar should start weakening sooner. But in the meeting, they came out and said the whole of 2024, the interest rates are going to be held at the current levels or maintained at the current highs. So here the standout of yesterday's communication, now this was Wednesday, was scaling back expectations of its 2024 easing cycle. So easing simply means lowering interest rates. And they basically diminished hopes of easing in 2024. That means for the better part of this year and next year, the dollar is will continue to be strong. So prior projections of 100 basis points easing slashed to 50 basis points. So the market was expecting, the current rate is at 5.5%. Maybe there'll be one more hike, but the market was expecting at least they start reducing interest rates, at least by 1%. But turns out, based on the communication and the tone on Wednesday, it's very apparent that they will keep things high. That means it's not going to be very good news, especially even for third world countries where the dollar has been very strong. So the clear message coming through from the Fed was that it remains uncertain whether the terminal rate has yet been reached and that it would be premature to consider easing. So that basically just means options to increase interest rates are still on the table, but we're not going to see any cuts anytime soon for the better part of next year. So a few hours before the Fed decision, the Bank of Canada here suggested that the BOC was holding out for one more hike in its projection. So if you look, if you go to this calendar here, you have the Bank of Canada. Yeah, a summary of deliberations. Do you have a okay. So okay, before I think it's not in this article. So before we go on, you have to know that a lot of central banks will also take cues from the Fed, because you wouldn't want to start reducing interest rates while the dollar is still expected to be strong. So it's going to have a negative impact on your currency. So even the Bank of Canada is expecting, it paused, but then the pause is to mean that we might hike next time. So it's still expecting one more hike or something like that. So this is to deter expectations of easing. So if the Bank of Canada was to raise too soon, then it would mean that next time they won't raise. So they are trying to keep that market expectation up. Remember what market expectations do to prices. Let's have a look at the chart first before we continue. This is what market expectations do to prices. Remember, for the better part of last week, I used the hourly chart all the way up to Wednesday, from Friday actually. This is what we had. The market was expecting that we will have. The market was expecting that we will have, yes, the pause and at least some easing or some communication on easing. And what happened? If you look at gold, we started seeing it move from Friday all the way. So Friday, Monday, Tuesday, Wednesday, all the way till Wednesday, the market was expecting that the Fed is not going to hike and maybe things are looking good. And this will at least imply maybe some easing in 2024. But when the meeting came and they dismissed most of these expectations, then we had the market coming down. So it's cleared half of almost 2/3 of these expectations. So this was the period when the market was trying to price in the fact that we might see more easing in 2024. Let me just change the color to this point here. So you have this, and we have this period from down here. Yeah, so you see, this was the market running on expectations, and the work of the central bank is to manage expectations. The market most of the time will just move based off of expectations, and in this case, you're seeing here that, let me just change this to a different color. You're seeing here that the market was expecting a pause, number one, and some communication of easing. That's why it started rising even before the meeting. And then during the meeting and after the statement was out, it just corrected itself. So I should expect a complete correction of this trend back down, because this is where the expectation started. So I should be expecting a complete correction of last week's rise in expectations based off of what you're currently seeing right now. So if you go to, let's go back to this. So that's basically what they're saying here. Even the Bank of Canada is trying to ease expectations. It's trying to deter easing expectations from building up prematurely. Basically, they're trying to prevent a situation where the Canadian dollar is or might start being weak. So then we will pass through that and then now go to, so we'll just go through these statements and then now go to the charts, because there's a lot to unpack with this. So one thing about, okay, so here it's saying with Euro USD, took its time, but it ultimately, the Fed's hawkish measure resonated with it. So we started seeing a drop in Euro. That's okay. One thing to look at, we've had a small spike in Euro USD today. And yeah, we might see the Euro continue going lower. But the most important thing and the most interesting news that I'm getting is from the Swiss National Bank. Yeah, so if we go to the chart, and this where you can see that the fundamentals are a bit obvious, it's usually much easier to trade. Where you can see that the fundamentals are obvious or a bit obvious, it's usually much easier to trade. So let me just look for that news for Swiss franc. Yeah, it was this one yesterday. Yeah, there was a decision to pause, and then there was a policy statement. So let's just unpack that policy statement because it makes things a bit obvious. So a 25 basis point hike in the policy rate is widely expected. So this article came in much earlier. Also expected is commentary on the SNB using Swiss. Now this is what is interesting. The SNB using the Swiss franc to meet its monetary goals. So usually SNB, just like Bank of Japan, usually participates in the Forex market. Yeah. And now if you can see the intentions, then somehow you can be able to gauge how things will go. Yeah. So here they're saying the Swiss National Bank sold 32 billion francs. So remember, when you're buying, you're trying to prop up the value. When you're selling, you're trying to just before we get into this, 32 billion, I'll explain as we read further. 32 billion franc of FX in the first quarter of this year to keep the Swiss franc from being strong. Yeah, so in the first quarter of this year, when they were selling, they tried to prevent it from being strong. But in the second quarter, it was something a bit different. In a familiar story now, it should be a familiar story now. Yeah, SNB is trying to keep the real franc stable from monetary purposes, which in practice means engineering a stronger Swiss franc. So in fact, the CHF nominal trade weighted index is plus 7% this year. Given the strong dollar, it seems the Swiss National Bank will have to try harder to get Euro CHF lower to deliver that nominal CHF strength. So at the moment, they're trying to prop up the value of the Swiss franc. And then it's saying expect Euro CHF to stay offered near 0.95 multi-month, and any rallies to prove fleeting. So you can tell that, number one, if you go to the chart, for example, for Euro CHF, usually when you're trading in line with the banks, then it makes your work a bit easier. This is Euro CHF. So they're saying expect it to be bid at to be offered at 0.95. But that also means, because they want to suppress Euro CHF, then looking for opportunities at resistance levels. So we have that level, we have this level over here. Looking for selling opportunities at resistance levels is probably a good idea going forward. Yeah, targeting these lows over here. So this is Euro CHF, this is the 4-hour chart. If you go to the 1-hour chart, I hope I'm sharing the right screen. Now, if you go to the 1-hour chart, it looks something like that. We had this spike yesterday from the news, and it's being held where it is at the moment. But it looks like a good idea to start looking for selling opportunities along major resistance levels in this market here. So we have, for example, at 0.97 here, if at all we have Swiss franc approaching, first off at the current level, and then this level over here, and then this level over here. All those are potential areas to look for selling opportunities if going by what has been said is true. Yeah, that is, they're looking to make the Swiss franc strong at the moment because it's gone too far down. Okay, so that can apply here, but I will be skeptical if it will apply on USD CHF, because remember, USD CHF is, the dollar is strong, but since you expect the euro to be weak, then this is probably a better pair to trade against Swiss franc in terms of looking for opportunities in the market. Okay, so let's move on with this. Okay. Okay, so this is more news now for pound. We've talked about the dollar, the euro. It's a bit obvious the weakness is still showing. Now let's look at the pound, and then we go on to other more recent news. So the dramatic repricing of the Bank of England tightening cycle has taken a toll on the sterling. The market now only prices a 47% chance of a rate hike. So this article came in yesterday early, and you can see that the market is starting to believe that it's going to be harder for the Bank of England to continue hiking. That's the belief. Remember, you're always trying to manage expectations when it comes to these markets. So this is probably contributing to also us seeing a weaker pound going forward. So if I was to go to the chart for GBP USD, let's do that. Let's look at GBP USD. You see, it's very obvious when you have technicals and fundamentals backing your analysis, then it's very obvious to know what to do. So in this case, it will probably be a good idea to continue trading the trend. Although you have to be obviously use your strategy properly and risk management and the likes. But if you can explain, and in this case, we have managed to explain why we're in a downtrend, then there's reason to believe looking for pullbacks and continuations and things like that. Trend following strategies basically are going to make sense in this market. That means, for example, I'll probably want to see if we can fill that imbalance, then this supply zone over here and this imbalance over here, that'll probably be another good idea. Or any pullbacks in this market. So you're obviously in a downtrend, and it makes sense for us to just look for shorting opportunities. However, if we have the market rising substantially, then we need some justification for it's going high. But at the moment, it's looking very apparent that because of the weakness in because of the expectations that the Bank of England is going to have a hard time hiking, then chances are we'll continue seeing a weaker pound going forward. We'll be expecting something like this. We'll continue seeing a weaker pound going forward. So again, if you have any questions on the chat, you can just ask while you do the analysis for this. So yeah, so this is pound, a downtrend, but I'd want to look for pullbacks first on the pound. That means I'd want to see it push a bit higher before going lower with this one, especially because we already have had this extended move downwards. So we'd want to see a pullback and then now continuation. But chances are at the moment, if you don't have a pullback, it's going to go lower. If it breaks this low, then we'll be looking for this zone over here. Try to see if we can take it much lower, but it shouldn't be a dramatic move. It's probably going to be more of a slow-paced downhill momentum going forward. So that's with that. Let's go back to this. Yeah, okay. So today, okay. So this is the Fed repricing. Yeah, so this is today's article. That was yesterday's. The other one you're reading, which was this one, was yesterday's article. Remember, to do fundamental analysis and sentiment analysis, we have a video that came out on Wednesday, so you can go through that while we go through this. So you're basically just doing what we've discussed in that video that came out on Wednesday. Okay. So US interest rates continue to grind higher. Overnight, the Treasury yield. So this happened, I think it was yesterday. Treasury yields simply give you a forecast on where the markets think interest rates are going to go. So if they go higher, that means the market thinks interest rates are going to go up, and that means a stronger dollar. So this is the highest they've been since 207, yeah, in terms of the Treasury yield. So the market is strongly believing that we're going to see high interest rates, and this is going to weigh in on a stronger dollar. And we're also going to brace ourselves because you're going to see the dollar strengthening across the board. Driving the move continues to be the reassessment of the Fed's higher and longer policy. We've already discussed this. And then for Euro, the data from Europe, of course, is not coming in well, and this should help us hold. And then here is saying, as discussed earlier in the Swiss National Bank review, the dovish turn from the SNB did not do too much to damage the Swiss franc, since the SNB is still selling FX. Just a minute. Need to look at this. Okay, this Swiss franc story is good to when a bank is actively participating in the markets, then it's usually good to be trading in line with the bank, and it usually helps because now you can know the trend, and it makes your life easier when it comes to technical analysis. We have that, a surprise in pause. Just a minute. Yeah, so as always, the SNB says it's ready to intervene in the foreign exchange market. In the current context, this means selling foreign currency to strengthen the franc and limit imported inflation. Imported inflation is inflation that arises from your currency weakening, as what we have in the country at the moment. Yeah. Yeah, so basically they're trying to strengthen the franc, and we've already discussed this by selling foreign currency. So you can follow up with maybe the reserves. Usually these banks usually have good data on how the reserves are doing. Yeah, so that explains why this here, if you go back to Euro CHF, because it's very interesting, it explains why we had a spike upwards yesterday. Yeah, this spike upwards was caused by the fact that they did not raise interest rates. But remember, they still want the Swiss national franc, the franc, to be strong. So there's a high likelihood that any one of these points here, if it's where it is at the moment or at the next resistance zone, or even here, there's a high likelihood of us seeing selling pressure back downwards based on just what we are reading with the Euro CHF. So it's good to have that in mind as we go on. Yeah, so everything remains the same from last week. Let us just have one more look at where we were last week in terms of our analysis and how it will have fared on this week. So last week, remember, we still talked about a strong dollar and the fact that we should be looking for shorting opportunities while using, of course, any reactions to the upside, you'll probably need a very good reason to justify that. So the whole of this week from Friday, so when is today? When was Friday? 15th. So this was Friday. This was us last week. Yeah, the previous market snapshot. And basically what we had was, first off, the expectation that the Fed might pause. That caused us to go up to where this imbalance was. And then immediately the news came out on Wednesday. From here, we had a push lower. Yeah. Do you expect to see the same thing? In the event that we start seeing Euro going upwards, then I know the only reason it's going upwards is to fill this imbalance first. And then from there, the best course will be to trade in line with fundamentals, which is continuing this downtrend. The only time you'd want to be of a different opinion is if you have a significant break above 76.35. That's the only time you'd want to say maybe we need to reassess the situation. At the moment, it's looking highly likely from the fundamentals that probably be trending lower. Gold was a very tricky one. Again, we had a very strong push higher for the better part of the week because of the expectations, and then they were repriced, and now we're going lower. So same play as that. So the only thing with gold is you'll have to be careful with these imbalances here and up here. In the event we still continue going higher, then probably this is what it's trying to fill before we go lower. Same thing with GU. We've already talked about this. Yeah, so basically the play in the market is still a strong dollar. How you achieve trading that in the market is looking for pullbacks and then entries in line with us, the view that it's a strong dollar. With regards to stocks, so that will be the last thing we look at. Look at NASDAQ. So we had quite a significant drop in prices. Remember, the last thing we had in the market was we're expecting the NASDAQ to show some resilience, which should be the case. But at the moment, it seems like that opinion is changing, mainly due to the fact that the Fed is still adamant on rising interest rates. And remember, rising interest rates is not good for stocks. That's why UT 100, US 500, US 30, that is the NASDAQ, Dow Jones, and S&P have this downtrend over here. So in the event that the trend changes, in this case, that means we'll be looking to go lower. Only thing that's going to prevent us from that is earnings. Once we have the earnings seasons coming up and we see that companies are still resilient, then chances are we won't have such a big downtrend and we will reverse and start going back up. Having said that, also, I'll be interested to see whether the markets get to this point over here. Because we've just had a very strong down push and we've not had any time to have a clear pullback before continuation. Otherwise, for the better part of today, we still expect prices to go lower based on the fundamentals, but that will be pegged on the fact that does price come back to this level, or do we just go straight lower from the current resistance? Remember, we're in this looks like a heads and shoulders of some sort at the current level. So it's good to know if at all we have room to go lower. If anything doesn't change in the markets, that means if the fundamentals don't change for the better part of this week, so this week is over, for the better part of the start of next week, then this should continue as is. But the fact that we are at a support level, probably we can have maybe a pullback upwards. That means we can have the market doing this and then attempting to go lower as the first scenario, or just breaking through this level today and going lower like that. Right, having said that, my eyes are still on Euro CHF because it's very interesting. I'd want to see how prices react on this level, and this level. And for those who are just joining us, you can always just rewind and see how we've gone about the fundamentals. There was a video on strategies on Wednesday on sentiment analysis. So you can just go through the FXPesa YouTube page and just check out sentiment analysis. We've done a walkthrough on how to read the news, but we'll have a more detailed analysis later on, a detailed video later on. Having said that, thank you so much for attending today's snapshot series and happy trading.